So the Canadian government claims that they want to reduce the population in Canada by 0.2% from a reduction in temporary foreign workers. There's a variety of reasons they've said this. I'm not going to get into it. What I want to think more about is whether or not they actually want to do this, or they're already seeing population growth plateau or roll over, and they're trying to capitalize on an economic trend by saying that it was a result of their policy ahead of that data coming out. We won't be getting the Q4 data when this policy started until a while after this announcement. To be more clear, I actually think that it's already happening and that they're capitalizing on this economic trend. And it honestly is a pretty smart move from a policy perspective. Here's a couple of reasons why I think that this is already taking place. Rogers subscriber growth has been hit by a slowdown in newcomers to Canada, down 40%. Toronto rents hit a 3-year low. Rent growth in Canada, coast to coast, has slowed to 2%. And I'm going to get into why that matters so much later on. But foreign student enrollment, according to Universities Canada, has been down 45%. India's been processing 50 to 60% fewer applications for fall of 2025. So from my perspective, when this decline in population that I think is already happening shows up in the data, it won't be entirely because of this policy change that was just announced by the Trudeau government, but it was very smart of them to announce it because I think that they're anticipating we're going to see this reduction in population growth. But the reduction in population growth happened because cost of living is way higher than it was a couple of years ago. Rising unemployment, especially high unemployment for newcomers to Canada, where unemployment for young people and newcomers to Canada is like 12+%. This was actually acknowledged in the most recent Bank of Canada monetary policy report. They show newcomers significantly higher than everybody else in Canada on an unemployment rate basis. I think that this really makes me want to compare to the 1990s when we saw a comparable deviation from GDP per capita. So you can see this big dip here where we were below the GDP per capita long-term trend line, and we're similarly below it and similarly trending down today. And I think that the 1990s recession is important to look at as a comparable because you basically saw this big jump up in population growth in the early 1990s, which I have highlighted here in this graphic. And then you saw a fall in population growth rate you saw a sharp fall, and then you saw a slow fall until basically like for the better part of a decade, until like the end of the 90s. And you saw a big outflow of non-permanent residents. And during that period of time, you also saw rents falling basically for the same period. So you can see this was from an earlier Bank of Canada monetary policy report, I think their January report, where it shows the correlation. Well, they say strong population growth is supporting inflation and rental prices. I'm not going to use the word correlation because people always rag on me for that, but that's their words, not mine. You can see the rents during that same period of time that population fell in Canada, so from like 92 to let's say 98. And I would say you can see a similar slump. It wasn't rents falling. I used the wrong word there. It was the rental inflation rate falling. Rate at which rents were growing slowed. It never actually went below zero. So rents never got deflationary, but they were growing at like just below 1% rather than the 3% that they were. And so we just saw basically rent inflation go to 10%, and now it's dropped to 3.3%. And this is where the important distinction is. In the most recent Bank of Canada monetary policy report, they have rent inflation, still a huge contributor to overall inflation, yet nationally, based on more recent data and more live data, let's call it, from rentals.ca and Urbanation, it would show that the rental inflation rate has actually fallen significantly. And by the time their data catches up to this, which again, it's lagging quite a bit, that's when we'll actually see the impact of population growth, which will be representative. The population growth figures that we'll see in a couple of months will be from today's data, from today's rental environment that I just illustrated that you can see on rentals.ca. So I hope that makes sense. I think that the government hitting their target is probably the lowest likelihood outcome of this whole thing. Here are the ways that, look, if you just think about what a non-permanent resident might do now, and we've seen a lot of protests, right? We've seen a lot of people saying that they don't want to leave. So they're either going to leave Canada, number one, or they don't leave Canada. But to me, an important alternative kind of in the middle of those is not discussed. And I think it's a key factor, especially when you compare us to the US. They don't leave Canada, but they say they left Canada. It's a really, really important gray area that I don't think many people have considered. And I think that this is especially interesting when you examine that 1 million more non-permanent residents live in Canada than official figures say, according to Benjamin Tal's analysis. And this actually prompted Statistics Canada to change how it counted non-permanent residents in the past. You can see basically Ben Tal's analysis shows that we had a 1.5 million person miss based on Statistics Canada's population and non-permanent residents composition of the total population. And so I actually think that the government is counting on option 3 being a bigger portion than most people think. And here's why. I don't think that the current government actually wants to reduce immigration. And it's regardless of like the policy of it. I think that they've always used it to kind of prop up the GDP figure at the expense of the GDP per capita figure. So how do you get both? And the getting both is, I would always just look at the US. So we've seen Canada's economy often compared to the US to show how badly we're lagging the US. There's that National Bank chart. I've used it a bunch of times myself, showing Canada lagging from a standard of living perspective compared to the US. But then when you think about it, when you consider it, Canada doesn't look that bad when you compare us to the OECD. We're kind of trending in line with them and the G7 and many other countries. And if you readjust Canada's GDP per capita, assuming that we're able to return to the long-term growth trend of our population, we're flat, but we're not trending down. We're not in that lost decade territory that I've been describing. And then if you were to adjust the US accordingly, because there's a really interesting Pew Research did a really interesting thing showing the number of unauthorized immigration in the US increased basically from COVID until present day significantly. And unauthorized immigrants were 23% of the U.S. foreign-born population in 2022. And if you adjust their workforce with data from Fred, then basically it shows how their GDP per capita would be lower and ours would be higher if we return to that long-term growth. If you were to adjust for the fact that they have a big portion of their workforce undocumented, it doesn't show up on paper, right? Like that's not in their population. And so the best thing that could happen for us, for a government that still wants GDP to grow, but wants GDP per capita to grow because they've been criticized so much on that, is to reduce the population without reducing the GDP. How do they do that? They see a lot of people leave on paper and not a lot of people leave actually. So my estimation was the U.S. 4.8% of the people were undocumented, which would yield basically a 3.7% reduction in their GDP per capita. Now, this is the interesting piece, is that in 2014, Trudeau actually published this op-ed showing how he felt that the Harper government's temporary foreign worker program was having negative pressure on wages for domestic workers. But this actually disagrees with a paper from Nobel. Like, this isn't just a nobody economist. It's David Card, who's a Nobel Prize-winning Canadian-American economist, which basically shows that when Miami's population grew by like 7%, if you've watched the Griselda TV show, that's like all those Marielitos that she was hiring. When they all moved there, it was like an instant 7% increase, and it had no negative impact on wages, which surprised me, obviously. You wouldn't think that. Anyway, I think that the point that I'm trying to make here is that Canada's population is probably already growing slower, and that's why we're seeing declines in rent and declines in demand for shelter. And I think that the government is motivated to make that decline reflected in the GDP per capita figure because they've been so criticized for it and because they need some economic wins ahead of the election. I honestly thought they were going to throw this election out based on polling, but I think they have this renewed energy since Carney joined. And so I think that they're trying to take credit for a demographic decline that's already happening as a result of the economy. I think that they're trying to thread the needle and stick the landing on taking credit without actually this materializing into a real recession. Right now, I would say we're in, I actually coined the term the me session. I've seen a lot of people using it, but that's where individuals are feeling recessionary. I don't know if we'll get to the point where the entire economy is shrinking, because if our population still continues to grow, we might be able to stave it off. And if they continue spending so much on government hiring and government spending. So that's kind of my entire take on the things. To sum it all up, I basically already think Canada's population growth is tapped out, if not rolling over. You're probably seeing a lot of people leave similar to the way that you did in the 1990s. It's already reflected in rent. They know this based on the data that they're seeing behind the scenes, and they are making this announcement in an effort to front run that data appearing to make it look like they did it. I hope this makes sense. Let me know what you think in the comments. If you get a chance, please like, comment, subscribe, etc.